Hey there, day traders, and welcome back to another exciting session with me, Bullish Bob Live. Today, we're going to tackle a critical topic, low-quality setups and how to approach them as smart and disciplined traders. First things first, how do we spot these low-quality setups? They might look tempting, but be cautious of setups that lack the elements of a high-quality trade. This could be poor technical signals, low trading volume, or simply not meeting your criteria. Now, low-quality setups require us to adapt based on the current market conditions. We need to be flexible. One way to do that is by reducing our share size. It's like putting on a smaller safety net. When you identify a low-quality setup, it's time to adapt. One way to do this is by reducing your share size. By trading smaller, you're effectively limiting your risk exposure. This provides a safety net in case the trade goes south. Keep in mind that trading smaller is not admitting defeat. It's a strategy to protect your capital in uncertain conditions. Don't forget to tighten up those stop losses, even if it's just mentally. A tight stop can help prevent a small loss from turning into a disaster. Protect your capital. Tightening your stop losses is an essential aspect of managing low-quality setups. Even if it's only a mental adjustment, a tight stop loss ensures that your losses are limited. Your stop loss level should be set at a point where the trade no longer makes sense, considering the market conditions. It's your insurance policy against significant losses. Here's a crucial point. You can choose to avoid a low-quality setup altogether. If it doesn't meet your criteria, just be patient. High-quality setups might show up later in the session. Remember, you don't have to trade every opportunity that comes your way. Sometimes the best trade is the one you don't take. That's why it's perfectly acceptable to avoid a low-quality setup entirely. If the setup doesn't meet your criteria or there's uncertainty in the market, it's okay to step aside and wait for a better opportunity. Remember, there will always be more trading days and opportunities. Now, low-quality setups can sometimes lead to high-quality results. However, this shouldn't be your main strategy. New traders in particular should not make this their go-to approach. Building consistency is key to longevity in the market. It's tempting to justify low-quality setups when they occasionally lead to high-quality results. However, relying on these sporadic wins is not a recipe for long-term success. Consistency with your trading strategy and emotional control is what creates longevity in the market. Don't be swayed by a few lucky trades. Stick to your well-defined strategy. A significant pitfall of taking a low-quality setup is the potential for distraction. You might miss out on a high-quality opportunity while being stuck in a trade you shouldn't have entered. Most traders, especially beginners, struggle with trading multiple stocks simultaneously. Taking a low-quality setup can be distracting, especially if a high-quality setup presents itself while you're already in the trade. Many traders, especially beginners, struggle with multitasking. Managing more than one trade simultaneously can lead to poor decisions. Your focus and emotions might become scattered, impacting your overall trading performance. Remember, there are various ways to mitigate risk, one of which is avoiding the trade altogether. Your financial status, risk tolerance, and goals will dictate how you approach each situation. It's not one size fits all. When it comes to mitigating risk, it's crucial to remember that everyone's approach may differ based on financial status, risk tolerance, and trading goals. For some traders, avoiding low-quality setups may be the best strategy, while others may choose to scale down their position size. Understand your own risk profile and align your approach accordingly. To sum it up, low-quality setups require careful handling. Adjust your share size, tighten your stop losses, and always consider the option to avoid the trade. Don't be tempted by occasional high-quality results from low-quality setups. Consistency and discipline should be your mainstay. Thanks for tuning in, traders. If you found this information helpful, be sure to give this video a thumbs up, subscribe to my channel, and hit that notification bell so you never miss out on the latest tips and strategies. Remember, success in day trading starts with knowledge, discipline, and the ability to adapt to changing market conditions. Until next time, happy trading and stay bullish.